Hello everyone, welcome to AdiTrade. Today we're going to be seeing the Nifty and Banknifty for 14 July, the expiry trade on Thursday. This is the daily chart of Banknifty. As usual, we'll start with the daily chart. See, the pink line that you see is nothing but the 200 EMA. I just put it to show a couple of things. See, yesterday we had a view after this kind of a bearish harami candlestick pattern that we would dip, and the dip came, and today was a pretty easy day to trade according to me, and I'll be explaining that why was it based on the CPR and stuff. But on the daily chart, yeah, we had a nice bearish candle. Now the most important, like, there was an event based, today was an event based day for a US market, as one of their inflation data came, and it came worse than expected, 9.1. so whether that will be taken as a positive news or a negative news, we'll come to know by the time the US market closes. Right now the markets have opened, but it's too early. Right now it's showing that it's down about 200 points. So we'll have to see how the market closes and then see SGX Nifty. Most likely we'll get a gap down tomorrow. Now let's see how we could have traded today. For that, I'm just going to come to this chart where I have the CPR enabled. Let's just disable the historical and tomorrow CPR, so the chart will be clean. And I'll shift to a 5-minute chart. Okay, this is the 5-minute chart, and we have the CPR levels. See, today there was a nice flag and pole pattern. Where was the flag and pole? Was this was like a flag, and how you calculate the target for the flag and pole is you take this recent high and until this end, and see, you can even place it here at the beginning top of this flag for the target, or there are people who place it even down. But always having a conservative target is better. Conservative means a shorter target, right? So that we don't wait for big targets and lose profit. So if you keep it here perfectly, it hit. See, after getting this gap up, right, the first candle, the first 5-minute candle was, yes, it looked like a bullish candle. We are going out, but there was no follow-up. So obviously there was no entry over here, right? With these candles, there's no way you can predict anything. The first entry, the best entry was here when this big red candle came, kind of breaking the CPR. See, yesterday also we saw that if CPR breaks, there's a possibility we'll hit the previous day low and S1. So even that logic worked. If somebody couldn't have taken this trade, the best trade is wait for this type of consolidation. See, once we came here, right, how the market consolidated, we didn't break out of this range from 35,100 in Banknifty to the lower end was 35,026. So in this 100-point range, we were going up and down, and finally, when in this red candle, when the breakdown came of this range, right, we could have entered with S2 as the target and the flag and pole target that I showed. See, I was able to trade only this part. I didn't short from the morning. The moment this move came and this consolidation happened, there were two possibilities when this consolidation happened, right? See, whenever like this a consolidation happens at the previous day low or like the previous day high, most likely we will either break this and come down, or we will reverse and go up, right? So, and that as we had this bearish view, I was looking for a breakdown, and that came. So the option premium I caught was just 100 points, but it was a pretty fruitful trade. Now, just to see what are the trade possibilities for tomorrow, I'm just going to come to this chart where I have all the support and resistance marked manually. See, even this level we had marked yesterday, that we could possibly take support here. If we come down, we did take support around that area. And another thing is, on the 15-minute chart, right, I had indicated this in our Cosmofeed group also when we started falling. See, this is the 200 EMA on the 15-minute chart. So when we were dipping, right, there was a huge possibility that we could take support here, because if you see, the last time we were in this 200 EMA range on 15-minute is on 1st July, almost beginning of this month. After almost like 13 days, we have come back here, so there was a good chance we could take. See, always the EMAs also act as a good support and resistance. So this was one of the target exactly. We have taken resistance at the 200 EMA. Tomorrow the trade that I am looking for, starting from this 15-minute chart, is first of all we need to break this 200 EMA for a further short trade, and possibly wait for a retest of this 200 EMA and then see if we can short. That is what I'll be looking at. Now, what are the levels that we can look for on the downside if we start to continue on the downside, right? On this chart, I'm going to add the CPR for the explanation's sake. See, this green lines are the S1, S2, S3, red lines are R1, R2, and the yellow and purple are the CPR lines. Now, assuming, like, we don't know what this number is going to be, the US, how the US market is going to close and how the SGX Nifty is going to close, right? We don't see, as of now, SGX Nifty is indicating around 97 point gap down. So we don't know what is going to happen. But if we get a big, sorry, I'll come back to this chart. If we get a big gap down, right, say we gap down close to this S2, or we gap down even, if the gap down is more than 400-500 points in Banknifty, most likely will just be sideways. There won't be much trade. If the gap down is, say, until, even if we get a gap down until 34,670 or somewhere close to 34,600, there is a possibility this gap might fill. So this is the gap between 34,380 and 34,550, almost like 200 point gap. So if we gap down anywhere in this region, right, most likely will, whatever happens, will break this and come and fill this gap is one possibility. In case we get off a huge gap down now, say the US market crashes further, it's about 220 points down, right? Whatever news, the inflation news had to come, it came, and it doesn't look good, so that's the reason it's falling. But we don't know whether it will recover or fall more. In case we get a huge gap down, say filling this gap around 34,300 or even below this, close to S3 of CPR, somewhere here close to 34,100, then most likely we won't have a trade. The best thing to do is avoid a trade or improvise in the live market. That is on the downside. My target for tomorrow, if we open flat or say open close to S1, right, or close to this 35,500, there is a possibility this gap might fill. See, we won't come down so much and bounce without filling this gap. After filling the gap, there might be a small bounce. So this gap fill is what I'm looking for. If we can get a trade where this gap fill can be traded, it will be good. But in case we get a huge gap down and gap down below this, close to this 34,100, then we might not get a very good day for trading. And now say the US market recovers and we end up having a gap up, right? See, the gap up or gap down is not in our control. The only thing that we can do is be prepared with our levels. So I'm going to hide the CPR to make the chart clean. So in case we get a gap up, the places where we can take resistance is this. First level is 35,100, where today we kind of consolidated in this region, and I can mark this entire flag as can be a resistance zone. See, in case we get a gap up, right, we have closed at 34,800. If we get a gap up, there's a good possibility around 35,000 will take some resistance, and then see if we dip again. But in case we break out of this 35,100, then the higher levels we have it marked, that is 35,230 and 35,300, which I don't think will happen so easily tomorrow, a trade on the upside. The other thing that I want to show on CPR is the monthly CPR, where, see, on this chart I'm going to remove the previous week high and just keep only I have only the monthly CPR. What I want to show in the monthly CPR is, and from 5 minute I'm just shifting to an hourly chart so it will be more clearer. See, we broke out of the CPR, we broke out of the monthly CPR, we went and hit R1 of monthly CPR and we have started dipping again. Now the next target on the downside, if the down move continues, is this gap, what we saw. Even if this gap breaks, then there's a good possibility we'll hit the CPR again. If not for tomorrow, probably Friday or sometime this week, there's a possibility of coming and retesting the CPR level of 34,120. Below this, we'll have to see how the market goes. But if this gap fills, See, as soon as the gap fills, there will be a bounce for sure, a small intraday bounce. So this is the gap area, right? As soon as the gap fills, always there will be some bounce, either an intraday bounce or one day we might get a good green candle. So after that, we'll have to see again if we get a dip, then the target is 34,100. Obviously not for tomorrow, but just showing all the levels on the downside that we need to be prepared. And being expiry, right, since the open interest for Banknifty, we have a pretty good resistance at 35,000, and as of now the support, there is some good support at 34,500. Now say we get a gap down and just remain sideways because of this wide CPR also. Now say we get a gap down, there's a good possibility we might take support at this gap boundary. See, the gap boundaries, the upper boundary and the lower boundary act as support and resistance. There's a chance if we remain sideways, we might even just take support at 34,500 and just remain sideways here because of the weekly expiry. As of now, the OI is showing there is some good support. Even today, the put writing at 34,500 is added. So these are the levels that I'll be watching out for in Bank Nifty for tomorrow. And let's just look at Nifty. See, Nifty had a nice fall. My view was during the market that Nifty might take a halt at this gap, but we even broke the gap and exactly, see, yesterday when I drew this line, I mentioned that we might or we might not take support at this line, and I marked 15,950. I don't trade in Nifty, but I did mark this line and we have beautifully taken support there. Now, in case we are getting a gap down, right, say about 100, 200 points, the next levels on the downside, if we slip further, for Nifty would be, the next support would come at 15,860, and below that we have this 15,800. So the best trade for Nifty, if you get a huge gap down, right, wait for some kind of a pullback to this previous day low and look for a short, or if you get a gap down over here 15,860, wait for a pullback to the next closest resistance and then short. That will be a very fruitful trade. In case now since this gap is filled, I'm going to remove this gap that is not required, but all the other levels will remain the same, and below this I don't think will fall so much, but it's just good to keep the levels marked. 15,730. And in case on the higher side, if we break 16,000 on the upper side, the first target will be 16,060 and 16,100. This level is where we can, let me go ahead and pull this. Line here, the next resistance we can take is around 16,097. Now just looking at the OI data for Nifty, even Nifty OI data is showing a bearish day. That is 16,000 and above we have huge call writing, and below we have put writing with a good support at 15,800. See, a lot of times, a lot of people would have seen that before the expiry date, there are days where before the expiry, if based on the OI, if it is showing a very bearish move, right, the next day completely opposite happens. So we have to be ready for that also. In case the US market suddenly recovers, we get a gap up and this level holds, that in Bank Nifty 34,670 holds, there's a good chance we might come up a little also. But these are the levels that we'll be working with along with the CPR levels. Thank you, and let's see how the market goes tomorrow.